Hey guys, this is Lisa Church with another tax tip. In my last blog post and video, I talked about why uncollectible status may be a good place for a taxpayer to be. I also explained that it wasn't a good long-term solution since the IRS would revisit your case at any time. If you don't see your financial situation changing and the thought of those annual IRS checkups doesn't give you the warm fuzzies, now may be the perfect time to file an offer in compromise, and I'm going to tell you why in just a minute. The focus of my practice in Severn, Maryland is to help taxpayers get in compliance with their IRS and state tax filings and to represent them before the IRS and the states with their tax collection issues. I work with individuals as well as business owners to determine the best way to proceed in settling their tax issues. Remember that uncollectible or currently not collectible CNC status is an option when a taxpayer has no available equity and assets and doesn't have enough income to cover their IRS allowable expenses. Remember also that the IRS has 10 years to collect a tax amount due. If the taxpayer is getting close to the end of the 10-year collection period, uncollectible status would be a great place to be for the short time remaining. If a taxpayer is at the beginning of the tax collection period, however, filing an offer in compromise may be the best way to proceed in settling your IRS tax debt. A successful offer in compromise is where the IRS accepts less than the total owed by a taxpayer to settle the taxpayer's outstanding debt. I'm sure you've heard the pennies on the dollar ads by the national firms who advertise on TV. These firms will collect a large fee up front from you to file an offer on your behalf before they know if you even qualify for one. The IRS does accept many offers, but there's a process that must be followed that allows the IRS to determine your reasonable collection potential, or RCP. As long as the taxpayer's offer meets or exceeds the RCP, then the offer should be accepted. So, what's the game plan for determining your RCP? Working with a tax professional, such as an enrolled agent, a CPA, or a tax attorney, will give you the best result when filing an offer in compromise. Just like going to the dentist rather than to your auto mechanic will give you the best result if you want to get your cavity filled. Your tax pro will want to start by pulling your IRS transcripts so that they can determine your collection statute expiration date, or your CSED date. Once they ensure that you have a significant amount of time remaining on your CSED, they have the green light to proceed. You're probably wondering, what's a significant amount of time? The exact answer is, it depends. Just a side note here, your tax transcripts will give your tax pro a significant amount of data that will not only help them to determine the best way to proceed in settling your tax debt, but will also show them money that you may have left on the table, so to speak. Like in previous years, you may have paid penalties and interest on a return when you could have obtained a penalty abatement instead. Back to our game plan. After pulling your transcripts, your tax pro will work with you so that you're in filing and payment compliance, both of which are required before submitting an offer in compromise. Your tax returns from the previous 6 years will need to be filed, and you'll need to be caught up on paying your current year estimated income tax payments. Payment compliance for an employee means that taxes are being withheld from their paychecks. Self-employed taxpayers, on the other hand, will need to have made all their estimated quarterly income tax payments. As of December 2018, when I'm recording this video, the first, second, and third quarter estimated taxes should have been paid. If a taxpayer is unable to make these quarterly payments, it may be possible to hold off on making the offer until early in 2019, as long as the threat of an IRS levy can be avoided, that is. It'll be much easier to be in payment compliance early in a current year rather than later in the year when you've already missed making a few payments. The main document used in determining RCP is the Form 433. There are different versions of the form for individuals and for businesses, as well as different versions preferred by the IRS official requesting the forms, such as the short form versus the long form. There's even a Form 433 used specifically for offers in compromise, called a 433A OIC. The 433 is basically a financial statement that reports your assets, liabilities, income, and expenses, and it's not an easy form to complete. Tax pros who specialize in representation work can guide you in preparing the form as well as advise you concerning expenses that you can add that will not only lower your RCP, but also improve your financial situation. I could spend several blog posts going over the intricacies of the Form 433 and in making an offer in compromise. In this one, however, I'll sum it up quickly. Hire a tax pro to represent you in this process, one who can explain to you first why you qualify for an offer, and second, what they see as important changes to make to improve your financial picture as it's reported on the Form 433. It should be an eye-opening explanation for you, but also one that's easily understood and easy to implement. There are many ins and outs and different things to consider when trying to determine the best way for a taxpayer to proceed in settling their tax issue. My goal is to help taxpayers navigate this confusing and overwhelming situation, whether it's with the IRS or a state collection issue. I've given you my contact information on this last slide and would be more than happy to help you with your tax issues. Just call or email me to make an appointment so that you can stop worrying about your tax issues and start doing something about them, and that will give you peace of mind. Stay safe, stay warm, and I'll be back soon with more tax tips for you.